Hey, welcome back, everybody. And this is our first day in New Orleans. And of course, we're here for some good eats and everything else. But really, what the heck's going on? It says mortgage rates were relatively flat, and yet sales seem to be really rocking and rolling. And the question is why? Because I thought you said mortgage rates were going to be diving down, which they did. But I also said they would be brief. And well, it was brief. It was less than a week. But they did dip down into the fives, and then they rocked back up again. And we're going to talk a little bit about the why. So let's get the show on the road here. Okay, so we're going to do things just a little bit different. And I say that because it's super important to understand what was happening with mortgage rates. How did it affect real estate, or did it affect real estate? And what should we expect on these coming weeks? So when we take a look at, let's pull this up for you guys. We had rates that basically kind of closed out relatively flat. And you might say, okay, well, why? Right? So if we do a little bit different and we head over and we take a look at basically kind of some of the headlines, okay? And it says, like in the upper left-hand corner, it says, hey, listen, you know what? Unsurprising surge in refis, which 100% expected. And in fact, a lot of the folks, we received a lot of thank yous, to let them know, not only by email, but by the video, to say, hey, listen, if you're going to refi, if you're, 1% or higher, you need to jump on it. And because there's only $200 billion worth of mortgage-backed securities being bought. I'm not going to delve into a lot of the mortgage-backed security conversation. Watch last week's or the week before. That's going to give you more insight. Let's stay focused on kind of what's moving forward because that's yesterday's news. So refis, rates dipped down. We said it was going to blink. They blinked. And now we're kind of back to where it was. And I said it would edge up higher than where we were at before, in which it did. So I guess another great reason just to watch this without any marketing. So let's get back to this one. So when we take a look at the bottom left, it says mortgage rates jumped to match the highest levels in nearly a month. And you might be saying, wait a second, George, you said that rates came down. Yes, it did. But like I also said, that once that acclimated, and once that started to wane, because $200 billion is really not that much, I said it would pop back up, and probably back up into the 6.25 or just shy of that. And it's exactly what it did. And then let's get back to our screenshot here. And it says, look, mortgage rates winning streak continues, meaning that we actually started to see some of that transition. So if we pop back here and we take a look, it says, listen here, on the 20th, it says mortgage rates jump back to match the highest levels in nearly a month. Okay. And as you can see, the highlighted section, it talks about the why. And a lot of that has to do with what was going on the geopolitical side of things. It talked a lot about what was going on because the lenders had already built in part of the price reduction in anticipation of the announcement of the $200 billion of mortgage-backed securities being bought, which in essence was buying down the rate. Now, that's the 20th. Okay. So then on the 21st, we started to see something, hey, a little bit flat, right? Then we come over here to the 22nd. Hey, look at that. We got another micro victory for mortgage rates. Mortgage rates actually started to come back down again. We started to see a little bit of the rates start to flatten out, and we started to see just a few more steps as far as what was going to happen with the overall outlook. People started to acclimate back because, again, everything that we see here, mortgage rates are traded out on the stock market. And so when we see volatility in the stock market, right, when we have, when we see attacks in other nations, when we have other nations' economies having an impact, which do impact us, when we have an influx of mortgage-backed securities being purchased by the feds, when we see all of these things, people move in and out of stocks. When we say people, we're talking about the industrial investors, moving trillions of dollars, literally, back and forth, hundreds of billions of dollars moving back and forth. in and out of either treasury stocks or, and I'm not going to delve into it, but, into bonds. Bonds are safe territory. When bond values go up, mortgage rates come down. And so that's what happened briefly, then that transition, and then it came back again. Why is that important? That is super important because then when we take a look at like Freddie, and if you see here, you see the trend, and it changes every day. Now the good news is, our par pricing dropped back down below 6.25. We hit closer to about 6.16. This shows par pricing at 6.09. That's when that closed out on Friday. But you can see the highlighted section on the right where it popped up just a little bit. Again, situation normal. That is that is normal where we see mortgage rates going up. And in fact, mortgage rates could be higher in the morning. Excuse me, and lower in the afternoon. We've talked about that. 5 questions you should be asking when getting quoted mortgage rates. We're going to put that link down below. Again, it's an 18-minute video walking you through the questions you need to ask when getting quoted mortgage rates, whether it's a refinance, whether it's a purchase. It doesn't matter. Again, there's no advertising, so just keep that in mind as we kind of roll along here. So let's talk a little bit about what's going on in the market. Now, we said that mortgage rates, went down, then they went up, and then they leveled out, and then we made a little recovery. Okay, but what did real estate do during that? Because mortgage rates, without a doubt, are one of the highest impacts that will happen with real estate, with buying and selling. So let's get into this chart real fast. All right. So as you can see in the highlighted yellow in the center chart there, I was highlighting this is situation normal where we see inventory and time on market and sales price. This is the normal wave. The last year's on the left, this year's on the right. Situation normal. We'll adjust a little bit, number wise and whatnot. The one disheartening thing is that we've gone from the 97 typical for this type of year, that's the bottom center chart, to about 95%. So we're seeing roughly about a 5% adjustment on pricing. Now, you might say, George, what does that mean? Okay, simple enough. If I have a $100,000 sale and I have a listing at $100,000 and I sell it at $100,000, that's 100% list to sales price. In this circumstance, it's 95%. So if I have a $100,000 listing, I'm selling at $95,000 or 5% less. Normally that's at about 97%, 98%. During the summer, we'll get between 98 to 101%, depending on the year and whatnot. Normal sales cycle. It's a little bit lower than what we normally like to see. And in fact, if we take a look at our running 7-day average, let me hide myself here. You can see, again, number of homes coming on market, 776. And then, of course, we have, a little over 800 homes that actually went pended. And, of course, we have 335 that actually reduced our price. So, to be clear, we still have a good number of homes coming on market on Friday. In fact, this morning we were sending homes off to our clients that were new on the market for them to take a look at as we handpick those for them that meet their criteria. And then when we take a look at the pended, you can see that pended number is higher. Now, just yesterday, the actual new on market running 7-day average, because it rolls each day, right? That actually was closer to the low 6s, and we still had almost 900 homes going pending. So we're drawing down our inventory, and that's important because as we come through and we take a look at, and hang on for this one. Again, guys, make sure you subscribe, hit that bell so that you get alerted, especially when mortgage rates drop down into the 5s, because that's when you're going to see it. Okay, super important, super accurate information. So when we take a look at what's going on and how these numbers are transitioning, okay, let's blow this up. Look, we're up 14.4%. As far as the pended sales. And that is a big deal because even though we've had a 5.4% increase in inventory, that's 200 homes, which is pretty nominal. This is 3/4 of Washington state. And you might say, well, George, your solds are down 1%. Okay, so remember, Solds are like looking in the rearview mirror. Okay, that's what's those were the December pended homes, and year over year they're still super close to each other. They're only a few digits off. Not a big deal at all. As far as pended is real time numbers. Coming home, homes coming on market as active. That's a dynamic running number. So when we take a look at those two, that tells us where our trend is, and our trend is definitely saying, hey, all of those buyers that were on the sidelines, they are definitely out looking. And it makes perfect sense because even still, and when you look back at Freddie, even though we were 1% when we hit the real high fives there, in fact, we dipped down to 5.75. Go back and watch the October, November, December of last year, and even the year before, where we predicted 2026 would do this very thing. Okay, again, it's fun to be accurate, and we do this every day, and there's no sensationalism. You just get the facts. Okay, like Joe Friday, whatever show that was. Anyway, so as we take a look at this, we have numbers that say, hey, you know what? We are moving along. In fact, we're moving ahead faster for our spring market than what we saw last year. And that's going to be a good thing, because then as we talk about the average sold price, that doesn't mean your house went down, but the average sold price, it's been suffering a little bit. It's 800,000 for the year to date over year. And our list prices are down just a little bit also. Now, is that situation normal? Absolutely. It's not a big deal at all. We will start to see that transition, happen in an upward trend. The fact that we are seeing a lot of homes coming on market and then a lot of homes going off market, and we're seeing that balance go through, that's awesome. Okay. Will we almost always have more inventory than the year before? At least for the upcoming months and probably even to next year, because our inventory was so low before, like historic low, that we need more of that inventory. But right now we're super balanced. It might lean and hedge a little bit towards the sellers, but it's just a tiny little bit, not a whole lot at all. And in fact, it's more of a balanced market than what we have seen historically, which is benefiting buyers. Now, where does it hurt? The sad part is it hurts with new construction, because right now, see, they were doing great in 2020 through 2022 into 2023. And you might say, well, okay, so why is that? So simple enough. Our inventory, again, was so low. We had contracted. So they say that a healthy balanced market is between 4 and 6 months of inventory. All right. The challenge is we haven't seen those numbers for over 10 years. We're like 12 years now. We haven't seen those kinds of numbers. Our balanced market, which I think is the new standard, I think we're going to see between 2 to 3 months is going to be a little bit more balanced. And as we hit 3 months of inventory, we actually saw, well, like right now, we're seeing a fair amount of homes coming on market and an equal amount of homes coming off market. And that is showing a very good balance. Okay. We're not seeing one extreme over the other. And that has been this case for about 10 to 12 years. So right now, that is what we're seeing. But now that we've seen more existing or resale homes coming on market, that takes the eyeballs off of new construction. When we take the eyeballs off new construction, their sales tend to fall down. They have to offer more incentives because they normally get an 8 to 10% premium over resale construction. And you get less of a home. You might have the same size, but you get smaller lots, things like that. A lot of the projects that we're seeing have 3,500 square foot lots. A lot of people want a little bit more room now that they have to move back into the core areas, with the return to work or return to the office, I should say. And based on that, people want a little bit more space, and therefore new construction tends to lag a little bit. And that's what we're seeing here. So as we come in, we've got some numbers that say, oh my gosh, George, listings of new construction coming on market is down. Well, you can see that's 54 homes. That's not a big deal. When we talk about sales year over year, it says, hey, sales are, basically down also. Well, that's only 28 homes. And when we talk about pended, that's just 8 homes. It's not a big deal, and it's going to be pretty consistent. Last year, they did a bang up job, really, at the end of last year. Q4 for new construction, fourth quarter. Those guys did a really good job because they did a lot of recovery from what they had in the first part of 2025. When we talk about year over year, and that is starting to roll over here. Rates, they're able to do a little bit better of a buy down. There are incentives just with so many more resale homes coming on market with more opportunities for buyers. They tend to, new construction loses the eyeballs. All right. So when we take a look at, pricing and whatnot, pricing came down technically, week over week is down just a little bit. It's not down horrible. It's about 10 or 15,000. Doesn't mean that, new construction, it's just the average of what sold during that time. Again, 100% situation normal. Bank-owned homes. Bank-owned homes. All right. So if you thought a couple of weeks ago when I said somebody out there is going to say, oh my gosh, it's Armageddon, foreclosures are off the chart, they're up 50% and whatnot. And I said somebody was going to come out and say it, and they did. The funny thing is when we talk about bank-owned homes now, they're not, and it's not as catastrophic as anybody thinks, because really at the end of the day, as you can see here, there's just not a lot of homes. We are one of the 5 sweet spots across the United States, and our inventory is down. It's one of the lowest across the United States itself. More importantly, it says here, our foreclosures on market are up 71%. I guarantee you there's a politician that's going to jump on that number. Throughout 3/4 of Washington state, that's 15 homes. It is 100% normal. 100% normal to have January have a bump because banks don't foreclose in December. Okay. It is bad business. It's bad business, right? So they will finish a foreclosure, but they will wait, and then they'll do a little bit of a bump, in January as they get things rolling, because they don't want to kick people out most of the time during December and whatnot. So they will hold off, even if they complete a foreclosure. They won't do the eviction process or the move out process typically until January, February, because it's just money smart. You keep the home heated, keep it occupied. It's safer on your investment, and that's what they do. It's what we recommend with the credit unions that we work with. Leave people in there, leave it occupied until we get to better weather. It's just safer all the way around, and that's what they do. Okay, so when we talk about and we pop back in and we take a look at our numbers, sure, they could say that solds are up 47%. That's 7 homes, right? So again, dealing with small numbers, doubling a small number makes it look fabulous, but it's really not. Pendeds are up 11 homes, or 42%. That just shows you how few homes we actually have out there as far as REOs. And REOs are not a great real estate owned is what REO stands for. That's when it has been foreclosed. Foreclosure is a process. When they've been foreclosed, that's what we have. So again, small numbers, not great, because they do paint, carpet, and vinyl. They get it back on the market at market value. As you can see, they are selling like everything else. So if you have any questions, put it down below. Let us know what questions you do have. If you're running into a hiccup when taking a look at mortgages, hey, feel free to give us a heads up. Yes, we are real estate brokers. We are not mortgage brokers, but we've been doing this for over 33 years. And my team has great information to help you out, and including 3 lenders if you need them. All you need to do is ask. In the meantime, have an absolutely fabulous day. We're going to go out and get some good eats here out in New Orleans and take a look at some beautiful history and whatnot. It's a little cloudy today, but, it's still going to be a lot of fun. In the meantime, I'll see you guys on the next video. Have an absolutely fabulous day. Take care.